You're welcome back, folks. On this video we're going to be talking about dealing range, also known as trading range. It refers to as a high or a low at which price is currently trading on. I'm going to give an example of that before we head straight into the chart. For example, we have price trading in this direction and then breaking a structure, coming down into the range, and then another break of structure, coming down into the range, and another break of structure. Now, where do we have our dealing range? Our dealing range forms when we have a high coming down here, then this. Now, this is our dealing range, and for a dealing range to be valid, we need to have a break of structure. And then I will advise you do this on the higher time frame or to get a directional bias. Now this is our dealing range. Since we had the break of structure here, and then the highest high before price starts retracing will be our dealing range, right into this point, and then expansion. Mind you, we want to see price trade at least below 50% of our dealing range or our trading range before looking for a buy opportunity in an uptrend. If it's a downtrend, then we look for selling opportunity above 50% of our dealing range. Now that aside, let's head into the chart, and then this is on EUR/JPY. You can see that price is currently trading into our dealing range. Now we have a break of structure to the upside, so this is in a bullish condition. And then where is our dealing range? We have our high right here, and then we have our low. Like I said, it's a range of a high and a low, and then we want to take the 50% of this. So I'm going to use our fib level to take 50% of this trading range. Now, as a smart money concept trader, what do we look out for? We look out for an institutional reference point below the 50%. In an uptrend, it is always below the 50%. Then reverse, that is in a downtrend, we want to sell above the 50%. Now in this case, we have a fair value gap right in our dealing range. This is a fair value gap, you can see that. Let me mark that out. This is right in our dealing range, which means what I'm waiting for is for price to trade into this fair value gap in it. Then I'll look for a buy opportunity on the lower time frame. Now, why am I using the 50% above and below in the market? Is because we have what we call premium and discount. Above here is the premium area, and below is the discount area. Now this applies both on a bullish and a bearish market condition. Now if this was to be a bearish condition, I want to sell from the premium. Right now, this is the premium up here. It is always the premium. Now since we are on the bullish condition, I want to buy from the discount. So you have to know that once you're on a downtrend, you want to sell from a premium area, which is this. And once you're on the uptrend, like this one right here, you can see we are trading higher. This is on the daily time frame, so this is a very big move. You want to buy from the discount area, which is 50% below 50% of your trading range. Now you can see, having this in mind, I know that my trading for that day or for the week will be simplified. What I'm basically looking at for is a price to trade into my point of interest, and then I can take price higher to this highest point price has traded into before reversing. You can see that this is a sweet market structure, and it's a live market. You can see price is trying to retreat into this gap. All of this movement you see is price trying to retreat into this area. If you can go down to the 4-hour time frame, you can see all of that. and now this is a liquidity resting below, which price is definitely going to take out. Now today is Friday, so if that doesn't happen today, we'll be expecting that to happen by Monday. Price trading to this place, giving me a market structure shift on the lower time frame, something like this. Then I'll look for a buying opportunity to take price higher. I hope you find this video helpful. Please like and subscribe to my channel.